Hey, and welcome back to another Skag Academy video lesson. In this one, we will be discussing order block logic, what they are, why they're important, how we trade them. So let's jump right into this, guys. It should be pretty quick. Order block logic. An order block, or an OB, is a smart money price action footprint that, when in the right location, many believe to be a sign of a protected price level or an area of very high demand or supply. So we use a very basic candle pattern used for this, just the engulfing pattern. Basically, like shown below here, we have the bullish OB on the left and the bearish OB on the right. Right? If you're not familiar with an engulfing pattern, which you probably should already be, the bullish OB on the left has a high efforts to the downside sell candle with some rejection, and then the candle on the right, that bullish engulfing, overpowers that. Same thing on the right side, we have the bearish OB with a high effort bullish candle that's completely erased by a high effort bearish engulfing candle. Now, this alone is not going to be, the end all be all, right? What really matters is the location of these, right? Location, 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 and you want that to be in liquidity, right? So remember those liquidity zones we talked about on the last lesson? That is where you want these to live. But be mindful, they will live everywhere, right? You're going to see this engulfing candle pattern all over the place. Not every single one of those is going to be an order block that's worth playing. It's actually going to be the biggest question you're probably going to have when you're looking to execute a trade is, oh my God, which one of these do I take? Right, so location, 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 guys. As you can see, we want these to be in really important locations. You see the accumulation and distribution schematics there. And if you remember from a few lessons ago when we went over the schematic events, you will maybe put together that the accumulation is in the spot of the spring, right? And the distribution is in the spot of that upthrust after distribution. These are perfect locations for order blocks because, as we know, those are protected price levels and price should not pass those areas. Right, so let's take more examples of these. Right, these are maybe not in spring or upthrust after distribution locations, but they're in specific liquidity locations. Right, we see the liquidity build up on the left side. We have those, equal lows, that area of resistance, and then price dips below that, and we get this order block movement. Same thing on the right side. We have this area of liquidity that has been built up on resistance. We break higher, pushing into that liquidity, which then gives the smart money the opportunity to step in and create that order block. Right, so let's just take a look at what this would look like on a schematic. There are some schematics here. So the accumulation schematic, again, location is very important. You could see we have one here at the phase A, right after the automatic rally. This is not an ideal location for this type of play, right? We're not looking for smart money to step in this early into the schematic, right? So playing that level is not going to be wise. But when we get into that phase C environment, that spring-like environment, and we see this happen, then that's a candle that we can begin to look to play, maybe make some adjustments, get in after the fact. And then also what's acceptable is any time past that, right? So in phase D, when it's going through its little kind of sign of strength reaccumulation up there, that would also be another great spot because we know at this point of the cycle, right, the smart money intentions are actually clear and they will be operating off of those intentions. Right, so here we have the distribution location, same thing. We have one in the middle of phase B, kind of just no man's land. Now, will you get a reaction off of here? Yeah, possibly. You can even scalp some trades, but it's not the ideal location for an order block. Again, we want it to be in that phase C, that upthrust after distribution environment. We want to see it in that phase D, that LPSY area. So again, as you're monitoring these, you're going to see some candle patterns that look like really good OBs. And we'll discuss all the different ways you can, still take what we call like high risk of failure attempts earlier in the range to see if you can kind of scalp around. But realistically, this is something that you only want to be kind of trading into after phase C. So just keep that in mind. We haven't talked too much about subcycles yet. This is a reaccumulation, but just understand that, again, there are some valid locations, again, that you can try. As you can see here, the first one does have a check mark on it. Why? Because it's in a very interesting part of the range. It is in that sign of weakness area, right, that ST test. it is, at the lows of the range. There are times where that is valid. You can see, that pushed all the way up to the AR if that was a real market scenario, and you would be able to capitalize off that. Now, maybe not long term, that area is tested afterwards, but it is a valid attempt. Again, the one that is invalid in the middle of the range, not really trading inside of liquidity anywhere, it's kind of just in no man's land, right? And then you could see the phase C and phase D examples that are there as well. All right, so let's talk about playing an OB. There's two ways that we can play an OB, two main ways that we look to do this. We have the limit order, right? So you can see on the one on the left, we have the order block there, and then we have, a bunch of price action. Some liquidity actually gets built up right above the OB, which is really nice to see. And then from that point, you can set a limit right on top of the OB, right at the top of the open candle before the push down. Put your stop loss below that candle, and we wait to see if that ever triggers. In this case, it did, and then it went and pushed to the high. Right? Then we have something called the live play. Now, the live play is if you're actually sitting at your charts, you see that price has traded inside into a liquidity area, and now you see an OB form. Right? This is only if you're at your charts actively trading. You're not going to be able to anticipate this, down the line for any reason. But if you see an order block kind of instantly form, you could try to play it right away. Because again, we know this is a protected price level. They're probably not going to try to bring price any lower. So we could see there was a liquidity clear, an order block formed, and you can enter, either during that retest down into the OB, you could wait for the candle closure. There's a lot of different things that confirmations you can personally wait for, but right after you see that form, you can feel free to hop into that trade and then target above the previous liquidity. So that's all about OBs, a few ways that we play them. Hopefully this is clear to you guys. If there's any questions, comments, concerns, thoughts, leave them in the section below or tag me in the Discord, and I will see you guys in the next lesson.